Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a breakdown of the action in today's session, Thursday, September 21st, where we saw the selling intensify and the NASDAQ at its lowest close since June, Ken.
Yeah, pretty rough day for the market. We went into a correction yesterday, so we'll see if the Nasdaq is going to hold this 13,000 level or not. But three stocks to watch today that held up pretty well and could do well here in the healthcare space. HealthEquity, HSA administrator, that's HQY is the symbol there. Also in healthcare, let's take a look at biotech Amgen, and finally in the insurance group Everest Group, ticker EG.
We'll do that first. Let's take a look at the major indexes. The NASDAQ today down 1.8%. The S&P 500 down 1.6%. The Dow shedding 1.1%, and the Russell 2000 off 1.5% today, Ken. So two sharp drops now in a row. Yesterday, IBD did go to market in correction with a close below that late August follow-through day low, and the selling just intensified today.
Yeah, no doubt about it. Checking breadth, it was close to 3-to-1 negative on the Nasdaq, and actually more than 5-to-1 negative on the NYSE. So breadth was not surprisingly weak across the board, and it's really just about the market technicals at this point. I know there's a lot of concerns about rising interest rates and sticky inflation, but the Nasdaq clearly looks poised to make a test of this 13,000 level. It came down close to that level last month and kind of closed up near its highs, but you do have a lot of undercurrent of selling in this market. The Nasdaq has been under distribution for several weeks now, so the handwriting has been on the wall. So I suspect the Nasdaq will try to make a stand at 13,000 if it gets down that far. If it doesn't, wouldn't be a big surprise, just because we are in a correction here. You see that high of 14,446 on the Nasdaq. I mentioned today on IBD Live. If we do come down to that 13,000 level, it's only going to be a pullback of about 10% off the high. And when you look at that in the context of a 38% gain for the Nasdaq at one point this year, still a painful pullback, but relatively mild, because again the Nasdaq was up as much as 38% this year. So we're under distribution here. The good thing is, if there is a silver lining, if we do undercut 13,000, that could be a good enough shakeout, to maybe set the stage, for a follow-through day and maybe a little year-end rally. But we're going to have to wait and see how this all plays out. It's kind of a dangerous market right now.
Right, and we have talked about how September is a seasonally weak period. We've also talked about the 10-year yield and really keeping a close eye on that, and Fed policy statements. So even if traders wanted to give this rally the benefit of the doubt, there were warning signs pretty soon after the follow-through day. The fact that we couldn't just hold above the 50-day line, and even if, like I said, bullish traders wanted to give this market the benefit of the doubt, it seemed like 9:15. That was a pretty clear day. I believe that was the day that we did decide to go to under pressure, Ken. And again, the market correction call, but making incremental decisions, not all or nothing decisions, hopefully will have helped traders lighten up before a day like today.
Yeah, definitely. In fact, we put the market uptrend under pressure on September 7th, I believe. So that was, and that was when it initially broke that 50-day moving average. You can see the Nasdaq kind of came up and tried to reclaim the 50-day line and just didn't have any success. So again, the handwriting's been on the wall for a while. We're seeing all the the big market leaders, whether it's an Elf Beauty or a name like Celsius, which finally lost support today, kind of still near that 50-day line. But some of your big winners this year have come under a lot of selling pressure, and a lot of it is just fund managers taking growth fund managers taking gains and some nice winners. And we'll see where we're at here, but that's not a great looking weekly chart for Celsius for sure.
Yeah, a bad looking bar there. And two bad bars here for ELF, but especially this week, a sharp loss. And NVIDIA, not quite the same look here, but Ken, it's on pace for a third week down in the row. And this stock hasn't done that all year. And this has been one of the darlings of 2023.
Yeah, what's impressive is when you look at the weekly volume on this chart, at least over the past 2-3 weeks, it's not like you're seeing waves of institutional selling in this stock. I think NVIDIA is still being respected for its AI business and all this huge revenue guidance that the company has recently given. But this just like we're talking about the Nasdaq testing 13,000. Let's go to the daily chart for NVIDIA and see the 400 level is going to be a key test here as well. So I think the Nasdaq and NVIDIA are kind of near inflection points here. Last month, NVIDIA came down to 403 and quickly turned tail and reversed sharply higher. So is it going to find support again at 400? That remains to be seen. Again, all we can say now is that we're in a market that's under some pretty serious distribution here.
Absolutely. Okay, next on the list, we want to take a look at the 10-year yield. So Ken, this is pretty significant here, this action.
Yeah, and this is all, we were talking on IBD Live this morning, talked to our news editor, Ed Carson. I was a little surprised we didn't see movement in the 10-year yield yesterday after this Fed meeting. You can see the 10-year yield dipped a little bit yesterday. It closed well off lows, but that was, it's pretty hawkish testimony. I know we talked about it yesterday, but, clearly the Fed is reminding, Wall Street that we're dealing with a pretty strong economy here. They still are penciling in another rate hike before the end of the year, and then they're not going to be cutting rates as aggressively as they first thought. They raised their economic projections, so clearly they're worried about this strong economy and maybe inflation sticking around. So you have this 10-year yield spiking, highest level since I think 2007. You have to go back, a long way here, but we're up at 4.48%. So you just have a breakout in bond yields, and again, that U.S. dollar still holding near highs and acting strong.
Right. Next on the list, let's take a look at XLF financials, taking it on the chin today, down 1.6%.
Yeah, it's probably just not an area to be in the market. I mean, we're starting to see some outperformance among healthcare and some insurance stocks. There's always a little bull market somewhere, but I think the financials, this XLF is at a clear inflection point here that it's sitting right at that dark line there. That's the 200-day moving average, which is a longer term support level. Obviously, that low of 33.57 could come into play. It's only about 40 cents or so from there. So we'll see if XLF can firm up at this 200-day line. You often can see it, but again, the market is in pretty rough shape here, and there aren't too many, not too many financial stocks that are showing good price action in their charts at this point.
Right. Well, let's take a look at HQY. This is HealthEquity, up on the day, 1.7% gain in some strong volume. It's been in an uptrend, and on a day like today, if you're up on a sharply down day, relative strength line's going up, Ken.
Yeah, and the weekly chart here is just kind of this long sideways consolidation. Still looks like it's in the early stages of a breakout here. You got good fundamentals at HealthEquity. They're an administrator for these flexible spending accounts. Health savings accounts. We have them at News Corp, but this is the leader in its group, and again, money clearly flowing into the stock. If you go back to the daily chart here, we talk about stocks being under accumulation, and you look at all of the all those blue above average volume spikes. There are some mutual funds or somebody getting in there and buying the stock, big institutional investors. So maybe this is going to be a safe haven trade, but it's risky. Most stocks are going to go down in a bear market during a market correction, but at least HealthEquity is showing some relative strength here. That RS line is quite bullish, and it looks like there are some big guns in there buying lately.
So with the market not looking good, Ken, is this a watch list candidate, or how should we be thinking about this in terms of adding exposure, or again, just keeping it on the watch list? What say you?
Well, I don't think it. I think it's in a buy zone right now, and I'm just going off of that recent high of 70.90. Okay, so you have the stock at 72.19. It's clearly, within 5% of that 70.90 pivot. And again, just go to the weekly chart here. You can see it's not extended at all from its 10-week moving average. It's getting close to that left side high there around 80. So maybe it'll keep moving up and bump up against 80 and pull back a little bit. But based off of that 70-90 pivot, I mean, I think the stock is it's in a buy zone right now. But again, you just have to, it's kind of buyer beware, because
Right.
a weak market usually takes everything down with it. Now, maybe there's going to be some money flowing into healthcare as sort of a safe haven trade. We'll have to see. So, any stock that you're buying in a market like this, you really have to keep it on a tight leash and just kind of have a stop, a mental stop, or just know where you're going to get out if it doesn't go your way.
Right. And now let's take a look at Amgen. This is AMGN, a breakout in yesterday's session, and it remains in a buy zone. This is another stock with a relative strength line moving sharply higher. And I like to look at this weekly chart, Ken.
Yes, indeed. It's another stock that's technically in a buy zone here. A very positive response to earnings. When Amgen reported not that long ago, they've got a cholesterol drug that's doing very well, an osteoporosis drug. They also, as part of their recent earnings report, you can see that's when it gapped above the 200-day moving average. But they also announced mid-stage trial results for an experimental drug for advanced lung cancer. So very very good pipeline at this company, and I think based off of that 268.24 recent high, still looks good here.
Thoughts on the growth with this stock, Ken, in terms of the fundamentals?
Well, it's a blue chip biotech, so
Mhm.
that is a concern. I mean, this is more a technical play than anything else. I mean, you're talking about a stock with $144 billion market cap. Obviously, you know, it was a really fast growing company at one point many years ago, and now it's a mega cap, and the growth is slowing. So with these large cap biotechs, you kind of want to understand the pipeline when they report earnings. How are their key drugs doing? They had a lot of good news from a lot of different drugs when they just recently reported earnings. So I'm willing to look past some skittish growth and declines in recent quarters. Still look at this as a high quality name. Obviously, it's got great sponsorship. So for
Right.
a mega cap biotech, I think it looks pretty good.
Mm-hmm. And yeah, I mean, here's a look at that, a quick look at that sponsorship right there. Let's round things out with a look at insurer Everest Group. Ticker here is EG. And if you look at this insurance group, ranked now number 32 out of the 197 groups that we track. So that says a lot in itself, Ken. And this stock is on the verge of a breakout. One may even argue it's clearing a trendline breakout right now with some volume behind it.
Yeah, seeing a lot of strength in the insurers, and they're typically a strong performing group when you're in a higher interest rate environment. These companies obviously collect a lot of premiums, and they invest a lot of these premiums, so they're making more money on their investments. Higher interest rate environment typically good for companies like Everest Group. So here again, a big long sideways consolidation, and a stock that looks really strong here. Back to the daily chart. It has rallied a lot, and it's getting up close to that left side high of 393. So I say this a lot on the show, but at this point, it wouldn't be surprising to see it just pull back a little bit from that 393 high. And if you get a little low volume pullback, it could give you maybe a better entry. But really watching the insurers, pretty closely here. There's a lot of decent looking charts in the group, and I think this is one of them.
All right. Well, thank you so much, Ken. And thanks to everyone for tuning in. We will be back with more tomorrow morning on IBD Live, and we hope you join us. We're going to be joined by Eric Kroll. He is co-author of The Life Cycle Trade, And he's done a lot of research about follow-through days and what happens in the aftermath and what that signals. So we'll get the latest from him on where things stand, not only on the index level, but also stocks on his radar too. So we will see you there in the morning, investors.com/IBD Live for that. And we'll also see you right back here tomorrow at the close to wrap up the week.